This is part two of what do you do in the event of the Fed meeting. We don't know what's going to happen on September 15th. Jim Cramer, welcome. Right. If the Federal Reserve does keep rates steady, which, imagine if that happens.
I have three plays that would be good to bet against, but of course these would be the opposite. Particularly one would be an unbelievably good play if the Fed does cut. Annaly Mortgage is the company that needs the rates to go down to have earnings explode. If the earnings explode, you conceivably could pick up 10 points on this $15 stock. If not, it probably drops to 13 again. That's where it was when we thought that the Fed wasn't going to ease. That's what I'm looking at. The two that I would buy puts on are H&R Block, because that means they won't be able to sell this mortgage division to Cerberus. That's my own view. Cerberus can walk away. And then the other one is CIT. This is a stock that does middle market lending. And I think and they're trying to sell their mortgage business. There's a perception that this company would be deeply hurt by the Fed keeping rates steady. If that's the case, this is a confidence play. In other words, people have lost confidence in CIT management. They've lost confidence in H&R Block management. Warren Buffett sold the stock. I would buy puts. Now, a lot of our viewers are sophisticated enough to recognize that a put play can be done. You could buy out-of-the-money puts on these. In this case, the 30 strike for CIT and the 20 strike. Well, that's what would be in the money for H&R Block. I would prefer to go out to a couple of months, maybe even go out to next year, and buy the 40 puts for CIT. There are going to be some risk there, but you can always go buy common if the stock drops, and buy the 25 puts for H&R Block. A guy who is afraid of too much risk should buy the 20 put on H&R Block and the 35 put on CIT, but you're going to have a lot of premium.
Technology, Jim, you've always been a supporter of technology in this environment when usually this is not the best performing quarter for tech.
Well, no, 15 out of 16 years this has been the best.
This has been.
Yeah, so you want it, tech is very right. Now, the issue with tech is that, and I've been behind tech since July. The issue with tech, the way I look at it is, will you have any sort of actual earnings exposure? I mean, Agilent and Applied Materials both had some really negative things to say in the last quarter. I don't think you'll get that from any of the companies that are directly involved with the PC build or directly involved with the LCD market, TVs. But you should be aware that there is earnings risk based on Agilent and AMAT. I'm willing to take that risk that a lot of the technology plays will not have that kind of earnings decline.
All right, thanks a lot. Jim Cramer on Wall Street Confidential. I'm Farnoosh Torabi. Thank you.